I'm John Purther, the Director of Market Insights for Payments Canada, and this session will share insights on the latest Canadian payment methods and trends, including how the global pandemic has impacted consumer confidence and spending, and the accelerated use of digital and contactless payments. 2021 was a momentous year for Canadian payments. From a volume perspective, Canada saw over 20 billion payment transactions in 2021. From a value perspective, almost 11 trillion value in payments made, meaning both have returned and are now exceeding pre-pandemic levels. So lots to talk about, and let's get right to it. We have three distinguished speakers today, including Seun, Senior Analyst for the Market Insights team for Payments Canada. He's going to be speaking about our annual Canadian payment methods and trends analysis. Christopher Henry, Senior Economist at the Bank of Canada, who will also be speaking about methods of payments and payment trends in Canada. And Seun Tuyo, Director of North America for RFI Global. And she's going to extend the discussion about payment trends outside of the Canadian borders. To ensure the flow of the session technically, my welcome message and the upcoming speaker sessions have been pre-recorded. However, time permitting, we'll use that available time at the end for a live Q&A with the speakers. So please use the Ask the Speaker box on the right side of the screen if you have any questions, and we'll try to cover as many as we can. Our first speaker is Seun, Senior Analyst for the Market Insights team at Payments Canada. Take it away, Stephen.
Thanks, John, and good morning, everybody, and thank you for joining our session. So I'll be covering the key highlights from this year's Canadian Payment Methods and Trends report. Each year, Payments Canada provides an overview of the payments trends observed in Canada through the publication of the Canadian Payment Methods and Trends report. This year's report will be available in September. The main objective of the report is to provide a holistic view of the payments market in Canada from the previous year. The report findings are based on the payments data from our internal systems, market research surveys, consultation with payment experts, and other industry sources. Let's begin with an overview of the payments landscape. In 2021, as John had mentioned earlier, there were a total of 20.6 billion payment transactions worth $10.8 trillion. Now, to put that into perspective, if we compare these figures to last year's numbers, it represents an increase of 600 million transactions, or 3%. And the total value of these transactions increased by $1.4 trillion, or by 15%. Looking back at 2021, it was a transitional year marked by an ebb and flow in consumer spending, with economic activity eventually returning to its pre-pandemic levels in the fourth quarter for the first time since the start of the pandemic. Public health measures put in place in late December 2020 across the country had a strong impact in the first quarter of 2021. However, with the easing of these measures throughout February, the economic activity rebounded in March. Since the majority of restrictions were lifted, households were not just returning to their normal spending patterns, but going above pre-pandemic levels. Pent-up demand resulted in record-breaking movements happening between March and April. However, it slowed down in May when the third wave of the COVID-19 hit, which again led to a dip in people's consumption and spending. The ongoing impact of the pandemic was felt towards the back half of 2021. With the easing of public health measures in the third quarter, economic activity rebounded, but at a slower pace than expected, especially in Q4 due to the implementation of vaccination passports and the rapid spread of the Omicron variant. So the overall result was that total payments market in Canada rebounded and grew in 2021 due to progress made in the country's economic recovery from the pandemic. Now, if we think about longer-term payment trends and focus on the left side of the slide on volume, you can see that when you compare it to previous years, it remains relatively unchanged. When we think about volume, there are some key things that come straight out from the slide. First off is that credit and debit cards continue to dominate the number of transactions, and usage continues to grow. Secondly, cash use is on the decline, accelerated by the pandemic, but it's still in the top three. Finally, check accounts for a small fraction of volume and is on the decline, while online transfers also accounts for a small fraction of volume, but it's showing very strong growth. And you can see that in the past 5 years, it's increased by about 469%. And again, this use has been accelerated by the pandemic. Now, if we focus on the right side of the slide on value, some key things come out here. First off is that electronic fund transfers and check dominate the share of value. EFT share of value is growing while check is declining. And the reason EFT and check volumes are low, but their values are high, it's mainly because it's used by businesses. So the number of times used is low, but the average transaction values for each payment type is high. So that's mainly driven by larger companies transferring large payment amounts. Here we show what the past 5-year payment transaction trends look like. If we look on the left side of the slide on volume, 3 key takeaways come to mind. Number 1 is that credit and debit cards are closely competing for the overall lead in payment transaction volume, with credit cards continuing to lead debit cards. Credit card led debit in volume for the first time in 2019. More Canadians frequently use credit cards than debit cards because of the cashback loyalty rewards they receive when making payments. Secondly, both credit and debit card payment transaction volumes rebounded in 2021 from their dip in 2020, caused by decreased overall consumer spending because of the pandemic. Thirdly, cash usage continued to decline. Many Canadians switched over to using contactless and digital payments during year 1 of the pandemic and have not gone back. The volume of online purchases among Canadians also grew by 12% compared to last year, which meant the number of purchase occasions to pay by cash at the point of sale shrunk. But decline has been steady for some time, brought on by the introduction of contactless payments. If we now shift gears and focus on the right side of this slide and look at value, we see that electronic fund transfer is growing while check is declining. EFT value grew substantially by 21% compared to last year, and this gain was mainly due to changes in AFT payment value year over year. After the drop of AFT credit value that took place in 2020, the trend was back to its historical levels. AFT debit values remained stable despite the economic fluctuations in 2021. Check is still used by businesses because of 2 reasons. Number 1, supplier preference, so vendors preferring to send or receive check payment. And number 2, it's easier for payment reconciliation. That is, you can attach payment information with a check, such as invoice details, so that you know what the payment is for. With electronic transfers, it's not possible to attach payment information, making it harder to know what the payment is for. The introduction of the ISO 20022 payment messaging standard coinciding with the RTR launch in 2023 will address this issue by allowing businesses to attach more information with payments itself, which will boost electronic transfers and reduce the reliance on checks. One other important thing worth mentioning before we turn over to the next slide is that the total value of online transfer transactions continued to grow in 2021 and eclipsed debit card total transaction value for the first time ever. Next slide, please. Let's now explore the impact of the pandemic on consumer payment attitudes and behavior in 2021. This chart reveals 3 main impacts of the COVID-19 crisis on Canadians' payments behavior. Number 1 is that the decline in overall consumer spending stabilized in 2021. Consumer spending gradually rebounded as the year progressed in 2020 and remained steady in 2021. With the easing of public health measures in the second quarter throughout most of Canada, economic activity rebounded due to a surge in people's consumption and spending due to pent-up demand. Economic recovery moved at a slower pace than expected, especially in Q4, due to the implementation of vaccination passports and the rapid spread of the Omicron variant. Overall, people were still cautious about their spending due to uncertainty over how long the pandemic will last. Secondly, contactless payments continue to be popular among Canadians. The pandemic continued to make people concerned about handling cash or touching card readers at the point of sale. Although the number has waned compared to the start of the pandemic, Canadians have discovered the ease and convenience of tap and pay using a payment card or mobile device. And as a result, Canadians used ATMs less often, avoided shopping at places that didn't accept contactless payments, and they avoided going over the amount limit allowed for contactless payments. People were doing this to avoid having to touch the card reader. And the increase in the transaction limits to $250 initially by credit card companies and later by Interac meant that more transactions could qualify for contactless payments. It's worth noting that although the Interac limit has been set at $250 for merchants and issuers that want to increase their debit tap limits, contactless debit payments of over $100 are not widely available. This differential in policies has spurred substitution of contactless debit card payments for credit card payments. And finally, the third key takeaway on this slide is that e-commerce purchases increased overall as Canadians were buying a variety of products online more often than before. Online purchases ramped up as 2020 unfolded and continued to remain steady in 2021. This result suggests that some Canadians stayed using and prefer e-commerce for their purchases, even after public health measures were lifted and stores reopened. So we briefly looked at the usage and behavior habits, payment habits of consumers as a result of the pandemic. With this next slide, we now turn our look over to businesses and the impact of the pandemic. With the effects of the pandemic still being felt in 2021, businesses continue to confront the challenges facing them in two ways. Number one was that there was a greater investment in e-commerce sales platforms. For example, 10% of business owners reported moving all or some of their businesses online. Number two, businesses accepted digital and contactless payments more often or for the first time. For example, 12% of businesses upgraded their payment terminals to start accepting in-store contactless payments, and 38% of businesses accepted payments via Interact e-transfer more often. So a key narrative in last year's CPMT report was the continued rise of contactless payments driven by the pandemic. I'd like to focus on mobile payments, which represents an important component of contactless payments. Mobile payments volume and value each grew by 17% from last year. 22% of Canadians have used a mobile wallet to make an online purchase in the past month. Although mobile payments represent a small proportion of the overall payment pie, the pandemic has altered the growth trajectory of mobile payments, and it's become more mainstream as a result. There are many factors fueling growth. Firstly, mobile payment offerings are coming of age and are focusing on creating compelling user experiences rather than just basic functionality. The penetration of NFC-enabled phones has increased dramatically and is still growing. Consumers have become avid users of contactless payments, especially since the start of the pandemic, which has in turn prompted trial of mobile payments as a contactless payment option. As a result, consumers are growing accustomed to using their smartphones for contactless payments. Since the pandemic started, 45% of Canadians who use their mobile wallet to make store purchases say that they're using it more than they used to for several reasons. Firstly, it eliminates the need to carry a wallet or payment card. It also allows them to make contactless payments, which is safer due to the COVID-19 virus transmission concerns. And finally, it's a faster way to complete their purchases. As you can see on this chart, a large majority of Canadians, over 2/3, do not have a mobile wallet. Yet smartphone penetration in Canada was 90% at the beginning of 2021 and is expected to reach 95% by 2025. Also, the penetration of NFC-enabled phones has increased dramatically and is expected to continue to grow. As contactless payments usage continues to grow in popularity, mobile wallet usage is also expected to rise. Among Canadians who have a mobile wallet, the primary reasons why they have not used it for store purchases in the past month are a lack of understanding on how to use their mobile wallet app, and having security concerns with storing their payment card information on their smartphone in case it gets lost or stolen. So to sum up today's key learnings, there are several things to take away. Number one is that there were a total of 20.6 billion payment transactions worth $10.8 trillion made in 2021. So year over year, that's a very strong rebound from the 2020 pandemic year. Number two, more Canadians continued using digital and contactless payments than ever before due to the pandemic. Thirdly, credit and debit cards continue to account for the largest portion of total transaction volume, while EFT dominate the transaction value. EFT value surged compared to a year ago, helped by a return of AFT credit value to its historical level. Contactless payments are also growing and a popular substitute for lower value cash transactions. The growing use of mobile payments is definitely a trend to watch. E-commerce, as we saw, is also growing, with credit cards dominating this space. And in the last 5 years, cash and check transaction volumes and values have significantly declined. And this has been a long-standing trend that we continue to observe this year. On the other hand, online transfers have grown tremendously, with Interact e-transfers leading the way. And finally, it's expected during the post-pandemic recovery that Canadians will resume using cash, but overall usage will continue to decline. Credit card usage will also rebound as the economy and consumer confidence strengthens and consumers resume purchasing big-ticket items. And contactless card, mobile wallet, and Interact e-transfer payments will all build on the gains they made during the pandemic. Thank you very much for listening, and with that, I'll turn it back over to John.
Thank you, Stephen. So interesting to see how the pandemic has shifted payment behavior for both the consumer and the business market, and likely for the long term. And just a note, as Stephen mentioned, the Canadian Payment Methods and Trends report will be released in the third quarter of this year. Our next speaker is Christopher Henry, Senior Economist at the Bank of Canada. Take it away, Christopher.
Okay, so thanks everyone. I'm here to talk to you today about cash and alternative methods of payment, some highlights from recent Bank of Canada surveys. So just in terms of background, over the past 50 years, we've observed robust demand for banknotes. So if we measure the value of notes in circulation divided by economic output, or GDP, we see that this ratio has been constant over the last 50 years and has actually increased recently due to the pandemic. So at the onset of the pandemic, there was a substantial increase in the demand for cash. This kind of eased off as containment measures lifted, but then increased again during subsequent waves. The demand has been driven mostly by increased demand for high-value denomination notes, such as 50s and 100s, whereas lower value denominations have witnessed decreased demand over time. At the same time that cash demand has been robust, we have observed that the use of cash at the point of sale has decreased over time. And so one way we measure this is by conducting surveys. So starting in 2009, we conducted the inaugural Methods of Payment survey, and this was combined a survey questionnaire with a 3-day payments diary. So the diary, in the diary, respondents record their transactions over the course of 3 days, and this allows us to calculate very detailed payment shares and have very detailed data about methods of payment use. We've also conducted surveys about Bitcoin, and more recently we've conducted surveys, increased monitoring via surveys during the pandemic. So on the right-hand side, I've shown the survey fieldwork mapped against COVID cases throughout the pandemic and throughout the last 2 years. So considering some long-term trends, we're looking at data from the Methods of Payment survey, which has been conducted every 4 years since 2009. The first thing we observe is increased cash holdings, as well as increased cash withdrawal amounts. But at the same time, there's been less Canadians that are making withdrawals, or they're making less trips to the ABM, and there are more Canadians that are not holding any cash on hand. There may be a pandemic effect in terms of recent trends from 2017 to 2021, as we note from network data that there's been an observed increase in the average ABM withdrawal value. Corresponding to trends in overall trends in the notes in circulation, we observe from our survey that those who hold cash are more likely to hold high value denominations. So going back to from the Methods of Payment survey dating back to 2013 and 2017, we see that there's been a steady increase in the proportion of Canadians that hold a $100 or $50 note. And interestingly, in 2021, we also observe increased holdings of lower denomination notes as well. And again, one of the benefits of doing the payments diary is that we can calculate very detailed volume and value shares by methods of payment at the point of sale and online. On the left, I'm showing cash volume shares, volume shares, and on the right, I'm showing value shares. So the cash volume share has declined steadily since 2009, and in 2021, we observe a cash volume share of 22% and a cash value share of 14%. Associated with a decline in cash volume shares has been increased contactless payments, and they account for 80% of all credit card transactions in 2021 and about 2/3 of all debit card transactions. Finally, one of the long-term trends that we have observed is measuring consumer perceptions of different methods of payment. So in these graphs, we're looking at perceptions of how widely different methods of payment are accepted, or how consumers perceive them to be accepted. So cash has overall been rated very positively, but there has been an effect due to the pandemic that consumers have less positive perceptions and more negative perceptions in terms of acceptance. And in terms of contactless payments, consumers have just become more familiar with this payment technology, and therefore you see a pretty noticeable change compared with 2013 to more recent data where it's very much viewed similar to debit and credit cards. So now we're going to talk about some specific measurements during the pandemic. And one of the first things that we've noticed is that consumer cash holdings have fluctuated with corresponding to different waves of the pandemic. So here I'm showing the average and median amount of cash on hand. So that's cash that's held in the consumer's wallet, purse, or pockets, as well as the proportion of Canadians that don't hold any cash. And as COVID-19 cases were on the rise, consumers tend to hold more cash, but there's also a greater proportion of consumers that are not holding any cash at all. So they may not be wanting to use cash, or they just may not have the opportunity to make the normal withdrawals that they would have made. However, as COVID cases decline, then the value of cash holdings also decreases. And so as of November 2021, Canadians are holding roughly $130 in cash on hand, and 22% of Canadians did not hold any cash. We also asked consumers about their perceptions of how cash is accepted at the point of sale during the pandemic. So we see that at the onset of the pandemic, consumers did experience concerns about using cash, whether it was observing a sign that said cash was not preferred, or actually not being able to use cash, or hearing a news report about cash not being accepted by businesses. So again, at the onset of the pandemic, 57% of Canadians reported having some concerns about using cash, but this has fallen to just 25% as of November 2021. And similarly, 12% of Canadians reported not being able to use cash at the point of sale at the onset of the pandemic, but this has fallen to just 3%. And finally, we asked Canadians about their plans to go cashless. So whether that be not using cash for payments or not carrying cash at all. So again, prior to the pandemic, only 10% of Canadians said that they were already cashless, whereas 82% said they have no plans to go cashless. So at the onset of the pandemic, there was kind of a big change in perceptions. So 20%, almost 20% said they were cashless, whereas 75% or 74% said they had no plans. But this has stabilized as the pandemic has gone on. And over the last couple of years, throughout the pandemic, only 14% of Canadians said they're already cashless, and a portion of those actually reported holding cash, so their kind of intentions don't really match their actual behavior. And around 80% has been quite stable in terms of having no plans to go cashless. So that's a quick overview. Thanks so much for your time, and happy to have any questions.
Thank you, Christopher. Our final speaker is Seun Tuyo, Director of North America for RFI Global.
Thank you, John, and hi, everyone. So I would just walk you real quick through the global trends we're seeing within the payment landscape, putting some perspective on where Canada sits versus the rest of the world, starting off with changes to payment methods from cash to cards payments, electronic payments, contactless payments, and then we'll move on to see disruptions in payments, particularly the rise of fintechs, comfort levels we're seeing of consumers to start to use these types of payments providers, and of course finish off with buy now, pay later providers, from drivers we see amongst consumers to potential use cases amongst SMEs. So just starting off with the global changes we see with the use of cash. So globally, the proportion of regular cash users continues to fall, and we see that this is universal. We see it across several markets and generations. As Stephen had mentioned earlier, the pandemic accelerated the ongoing decline in cash usage globally, with cash being a transaction that requires an in-person exchange. The changes with the pandemic, people requiring restrictions, having to stay at home, we've seen that they've now all moved to an alternative way to pay. And so the big question is where all of these volumes of payments now migrating to. So if you focus on the middle side of this slide, you'd see that digital payment methods have now been one of the beneficiaries of this accelerated shift away from cash. So as we're seeing cash decline, we're also seeing an increase in the proportion of customers who say that, they've moved to mobile or digital wallets. So we've seen that increase across all of these different markets that we track. People saying that they're using mobile digital wallets, and not just in Canada. We've seen this in India, we've seen it in Hong Kong, we've seen this in Singapore. So across many of these markets, with this forced break away from cash, they're moving into using alternative methods of payments, and oftentimes it's either cashless methods of payments or the digital wallets that we're seeing this move. And moving into these types of service of payments, we're seeing more people starting to see that their futures can actually be, there can be a future without cash, going into half of the proportion of consumers that we spoke to, about the 44% of consumers saying that they see a future without cash they see a future without cash in them. For Canada, it's slightly lower than that proportion. It sits at about 30 to 32% that we see for consumers. And so what this is indicative of is a lot of consumers are changing their payment preferences, going away from cash to more digital and contactless payment for the long term. And this is not just within the Canadian hemisphere. We're seeing that going through across different markets. So we go through from the Asian spaces to across North America. We're seeing this consistency shifting away from cash, and potentially this change is looking like it's here to stay, accelerated by the pandemic. And if you focus on the further right of the chart, just looking at the merchant side, we're also seeing an increase in the proportion of their revenue coming from online sales and e-commerce. And if you recall, at the start of the pandemic, a lot of consumers buttoned down on discretionary spend. There was a lot of hesitations towards, the economy, apprehension towards the economy, their personal finances during the worst parts of the pandemic. But once all of these things started to change, most of these transactions moved on to e-commerce, and we're seeing a lot of merchants that we spoke to in Australia, Hong Kong, the US, indicating that they saw an increase in their online sales as a result of the pandemic. So while this spending did decrease as a result of these concerns, we still see a lot of consumers spending more online. And in Canada, at the lower right of this chart, what we're seeing is, as of 2021, a significant proportion of merchants indicating that a good amount of their revenue was generated through online channels. So in many cases, with this shift towards digital channels, where payments are being made in person is less likely to come from cash, most likely to be made through mobile payments, and a great amount of share of these transactions are coming through e-commerce for these merchants. So the big takeaway from this slide that I wanted to call on, across the board for these many markets that we track, credit card is still the main way a lot of consumers are spending monthly, including in Canada. But the big thing that we've noticed is globally there is that increase, and I'm sure if you notice with Stephen alluding to this, an increase in electronic payments. The pandemic has also birthed a lot of new use cases for electronic payments, just by virtue of social distancing, people not being able to shop in store. There's a lot of sharing of bills just by the pandemic. So many people are having to split bills, sending even relief to support causes just from around the globe. So we're seeing across these different countries, a lot of responses are coming through electronic payments. So people supporting families financially, and they're doing so using electronic payments. And on the left-hand side, the chart is really looking at the proportion of consumers who have actually made contactless payment across these different countries. And this is one area where Canada tends to take the lead in terms of contactless payment. And for many markets, the adoption of contactless payment has been in progress even before the pandemic. But we've seen this move being accelerated by the pandemic. So a lot of consumers turn towards this mode of payment either as a result of being apprehensive of contracting the virus, or merchants refusing to accept cash, just being careful of hygiene factors, or just being the best method for them to pay all through the pandemic. But we see this upward trend across very many countries that we track, and just globally on average, so many countries are taking this as a way to pay. So markets such as the UK, Singapore, Canada, France, Australia, and Hong Kong are leading as the most common contactless adopters. And we've seen time and time again, Canada take the lead when it comes to contactless payments. And when you look to the chart on your right with mobile wallets, the appeal for mobile wallets is strongest in Asian markets, and this has held through over time. The proportion of consumers in other markets, including Canada, that we've seen when it comes to mobile markets has continued to increase through the pandemic. And as we've seen even within Canada, while this is still thriving due to the benefits of convenience, there is still that hesitation when it comes to the understanding of how to use mobile wallets, and the big factors of security and the general fear of storing information on their mobile devices. But overall, we're seeing across these different markets, consumers are becoming across different generations, as a matter of fact, are growing to become more and more comfortable using digital and mobile forms of payments. They're discovering newer use cases and demanding more from their providers. And so when we think about comfort levels, we're also thinking about the new entrants in the market, thinking about fintechs, digital providers. And so thinking about comfort levels when it comes to payments, looking across the financial services providers, when you think about other aspects of finances, so borrowing, investment, savings, the one area where we tend to see consumers indicate that they're most comfortable when it comes to using a digital only provider or a fintech only provider is the payment space. And this has been accelerated by the pandemic. So even with older consumers, younger consumers, we're seeing them indicate at much higher levels that they are more comfortable using either a fintech provider or a digital only provider. And we see that even in Canada, this has even gone higher as of 2020, driven most likely by the pandemic. So while consumers in China, India, and Mexico tend to take the lead when it comes to comfort levels using digital only providers, that's not leaving other countries behind. And as you see here in Canada, more than 1 in 2 consumers indicate that they're very comfortable using a digital only provider when it comes to their payment needs. And what this just simply indicates is, as we tend to see this upward trend on average globally, there's an indication that the competition within this space will continue to increase. So just looking at the proportion of consumers who have used a fintech provider across these countries. So with payments, that's the space where we've seen, like I said, the most disruption and successes, but not surprising across this space. When you look at the brands and the players in this space, they're mainly fintechs. They're mainly either buy now, pay later providers, or they're mainly players who provide services. So when you look at the WeChats, the Alipays, the Paytms in Asia, the buy now, pay later providers in the UK and Australia, Venmo in the US, these are fintechs or payment providers, and without exception, and it cuts across every market. So for consumers who have used any of these services, they're usually providers who have played within these spaces, disrupted these spaces, and have been successful within these payment spaces. So as of 2019, when we looked at the drivers of entry, it was around price. So they came into the market, and at that time it was offering a competitive product, something relative to what was available in the market. So they wanted to compete with who was in the market, offer something that was affordable. But right now, the top a driver of a product or a service offered by any of these providers is now about convenience, a better user experience. So it gives something more to think about when it comes to the traditional providers in the market. So because when you think about the services that these providers you see on the screen, when they deliver it, it's actually well thought out, well designed, it's digital first. They go from the user experience back up to build this product. So it gives for more reasoning when you come to thinking about the competition in the market. So when you think about it from a user experience, it's less about just the product that is in the market. The competition is much more stiff when it comes to disruption from a fintech service, looking at the payments landscape. Another area where we're seeing this shift when it comes to fintechs is them redefining what consumers understand as trust. At the top left corner is the proportion of consumers who indicate that they do not trust fintechs, and we're seeing this decline globally. So this used to be the biggest barrier to using fintechs, and this is declining across the different countries. So looking at Australia, Singapore, even in Canada, UK, this is declining consistently across all the countries that we've tracked this. While the decline in Canada may not be as quickly as we're seeing in other markets, we're still seeing this barrier usually softening compared to other markets. And what this indicates is that as the comfort level continues to grow, less and less consumers, more and more consumers are beginning to use these fintech providers and their services, which increases, again, like I said, the competition that's these traditional providers stand to face upon entry of these new players in the market. And the same can be said when you look at the bottom charts on the slide. So for SME businesses, a considerable proportion of SMEs in these markets also say that they're comfortable or open to using a fintech lender, with the lowest being the UK at the farthest left on the slide, with just 1 in 4 when addressing their needs. Canada tends to fall somewhere between the UK or Australia, and so we would expect them to be about the low 30s. So still a significant proportion of businesses that are open to using a fintech provider or a fintech lender for their business needs. Interestingly, the traditional providers like the banks, they still hold the advantage when it comes to trust, which is a critical currency when it comes to payments. So throughout the pandemic, banks, for example, they maintained that high level of trust throughout the pandemic. So on this slide, you're seeing a 7.6 out of a scale of 10 with their offerings to support customers through the pandemic. However, when you think about it, oftentimes when there is uncertainty for these customers, they look to established providers like the traditional banks to hold on to. That's not the time where they want to take risk with new players. So when you compare that to the trust they have for the new digital players, the fintechs, that sits at the 5.5. Quite a significant difference. The difference is even more when you look at Canada. For Canada, it's for the traditional banks that sits at about 7.7 out of a 10. And for fintechs, I think it's about 4.8 out of a 10, which indicates a greater differential compared to that. But what's interesting is for the traditional banks, even though you have that current advantage in the market, it's not going to be there for an indefinite time, because we're seeing the barriers to entry for these fintechs erode very slowly. And we're also seeing that the window of that opportunity for these fintechs to take advantage of the market continue to close, while it may differ from market to market, as we're seeing, for Canada, it might take much longer, since the barriers to enter when it comes to trust, when it comes to, having lower trust in the market, having comfort levels might differ. But for other markets, we're seeing this window close out much sooner, especially for those who have consumers who are trying out digital apps at much faster pace than we're seeing in Canada. So what we say in this case is, as much as possible, wherever these players fall within the ecosystem, it's important to take advantage of the opportunity as it comes right on time. And so with buy now, pay later, which is for what we see, potentially the next battleground within the payment space, I wanted to finish off with this, because there is almost no conversation you go into within the payment space without this coming up. Why consumers are turning to this method of payment, what's the driving factor, what's important to it, and the opportunities that stand as well within the SME space. So when you look at this map, with very few exceptions, do you see the driver being tied to the actual lending model. So with the exceptions of the UK and Australia, for example, where the borrowing model, so the 0% interest coming up as the driving factor, so people being able to purchase an item at the actual retail price and not having to pay any additional cost. Globally, what stands out is the convenience of buy now, pay later. And that's coming out very strongly, even in Canada, India, Hong Kong, Singapore. When you look around every market, it's really less about the lending model. It's more about the convenience, the user experience, the fact that customers are able to get through the purchase as quickly as possible with less stress, the experience of that purchase. That's what's the selling point for buy now, pay later. And so what the big thing is for that is the threat to every other player who's rolling out similar products, similar offerings. The threat to that is for buy now, pay later, while it's indicative that it probably would be here for much longer, is the fact that consumers are not just leaning on it for the borrowing model itself, because while all of these players may be putting out models that are similar to it, they have to take into consideration the benefits that these consumers are leaning on it for. So it helps me budget the convenience of it. So when you're building products that will compete with buy now, pay later, you have to take that into consideration beyond the lending model itself. And so when we also look at merchants, for example, it still comes through that is the convenience. It is also the customer experience that comes through first that makes merchants accept buy now, pay later as a strong driver. So looking through this, except for Hong Kong, which is at the top left corner of the chart, every merchant that we've spoken to, the US, the UK, Australia, the key driver is that convenient or easy way of customers to pay that we see come through. So that has to also go into the thinking process when you offer up this as a service to your customers. And so for SMEs, which we know that cash flow is always one of the big things that come through. Right now we're seeing at the top, at the left corner of the slide, the one thing that stands out now is dealing with the impact of the pandemic as the aftermath of recovery. But we know that the second thing that tends to come out is cash flow, managing cash flow. So we know that buy now, pay later is very well positioned to manage cash flow for these customers. And so we know that once these businesses start to use buy now, pay later as a means to an end to deal with their cash flow processes, they're usually repeat customers because we know there is no incremental cost to using it. And oftentimes when these customers use the services, businesses start to use the services, it's a very nice feat to resolving cash flow issues for such businesses. So something to think about for both traditional players and also new entrants into the market when they play within this space. And so in summary, just to wrap up, globally, we're still seeing cash usage declining across all markets, and the shift is to digital payments and other alternative methods of payment, and this is growing across all markets. So payments continues to be a competitive space, and it's important to make sure we're keeping an eye across the board, especially if we want to stay competitive within the space for fintechs, especially for traditional banks who have an established advantage when it comes to trust. And like I mentioned, the trust is an advantage for them for now, but it's not going to be there, long term, because that gap continues to close, not just within Canada, but across all other markets. So it's something to just keep thinking about because we see that transcend across all markets. So with that, I would come to an end and hand this back to John.
Thank you, Seun. So many of the behaviors and perceptions and trends in Canada are being echoed across the globe. Online, mobile, contactless, even the trust factor. While there are surely distinctions from country to country, the similarities and how the ecosystem is changing is fascinating. I thank you to all the speakers, a great discussion so far. And now With the little time that we have left, we'll go on to our Q&A segment. We've had quite a few audience questions coming in, so let's get to some of them.